back. This is Boomer Life on CL 650.
And yes, we're back. This is Boomer Life on CL 650. I'm Joanne Sutton, joined by JimDoyle, Senior Financial Consultant with Investors Group. And on Boomer Life today, we are talking about your financial future. A well-thought-out plan for your financial future is an integral part of building the life that you want for both yourself and for your family. Now, Jim, I know that you hold a number of designations. You are a certified financial planner, a chartered life underwriter, a registered trust and estate practitioner, a certified divorce financial analyst, as well as a certified international wealth manager. You're also a graduate of the UBC Sauder School of Business Family Enterprise Advisor Program. And before the break, we were talking about a very unique focus of your financial planning practice. That's your work as a certified divorce financial analyst. And it is a sad reality, divorce rates being so high that the process will affect a lot of Canadians' retirement plans. So let's talk about this for a little bit. Can we start with first, what is collaborative divorce?
Joanne, a collaborative divorce is an alternative to adversarial divorce, a no-court option. You have specially trained family lawyers. You each have your own lawyer helping you sort out your needs, but instead of working against each of you, the lawyers meet with the two of you to create a settlement that's right for both of you.
So I know this is an area of your expertise, but why would somebody need or why would somebody want a financial specialist on your collaborative divorce team?
Well, to tell the truth, not every file is going to need one, but for those that do, agreeing on how to divide your shared assets can be a major source of anxiety, confusion, and conflict. Making smart financial choices for you and your family can have long-range effects. When so much change is going on, do you want to be making big-picture financial decisions all on your own?
And there are so many big-picture things to be thinking about in that situation.
Sure. Big things like, do I keep the home? What if I want to keep my pension? How about if I need funds to buy another house? Which things should I look at?
So is this something you'd like to see more of, and kind of think that you've seen it all?
Absolutely. Joanne, I've seen cases where one spouse keeps the home to raise the kids with their long-term net worth declining, and their former spouse's net worth keeps going up or increasing. This might have been fair, but was it equitable? When it comes to the financial consequences of divorce, you really need a financial specialist on your team to help make better sense of your options and outcomes.
Obviously, it's important to reduce conflict before it gets to this stage. And before the break, we were actually talking about why it's so vital for couples to start their conversations about retirement earlier in life. It's a great goal, setting our listeners on the path for a solid financial footing. Is there something you're seeing that might be holding people back from improving their financial situation?
Well, here's the challenge we see. If I watch the Business News Network and they talk a lot about Greece or where they think where the price of oil is headed, it's pretty hard not to second guess your investment choices. Every week it seems there's some new economic event, political strife, currency issue, or something to be concerned about. This, unfortunately, doesn't help when it comes to creating a long-term financial plan that you can stick with. I want to help people feel more in control and confident they're making the right financial choices by helping to put issues in context.
I think one of the challenges that people face is they're simply not comfortable with their financial knowledge. It's a completely new conversation for them. So how do you help build financial confidence in your practice?
As we mentioned before, sometimes we wrestle with information and knowledge. However, they're just not the same thing. I think people are overwhelmed by the sheer volume of information and options, and nobody wants to make any mistakes when it comes to their money. There's a lot of information out there, as well as misinformation, and this is where clients really need our help, sorting out what information is relevant to their situation. I think real value comes from taking the time to educate clients and communicating clearly and concisely, explaining risk management in terms people can understand, and setting reasonable expectations from the start. Just imagine if the conversation with your advisor looked like this. These are the things that you need to focus on and pay attention to. These are the things you should ignore and not pay attention to.
You make it sound so simple, and yet I think every investor has wrestled with emotion at some point in their career when it comes to making investment decisions.
They say people are of two minds, left brain analytical and the right brain emotional. We've evolved from the agricultural age through the industrial age and now into the information age, which is highly analytical. And while the skills that gave us the information age are still important, they're no longer sufficient. People think of two minds, and as an advisor, I have to deal with both. As an advisor, you have to call people to action. That part comes from the right brain. And it's not enough to know something. You need to do something. Performance is not a goal. Retirement is a goal. My role is to help manage investor behavior.
When it comes to people's money and investments, do you have some ideas for helping people set up the actual action plan? What steps can you take to increase their confidence and the likelihood of success?
One way we can help is to explore their vision and ask them to describe what does it look like for you in a year, 3 years, 10 years, or 20 years. The more detailed, the better. You know, in advertising, they talk about selling the sizzle, not the steak. And it's about the experience. When I talk to couples about retirement, I want to talk about the sizzle. I want to talk to them about the exciting parts of the retirement vision, and then I can help them make sense of the numbers.
So can you give me an example of that? Like, do you mean you want us to talk about everything from whether we want to buy a boat or go on a cruise in retirement? Or are you asking the client to paint a bigger picture of the actual lifestyle in 1 year, 3 years, 10 years of helping the kids out or maybe looking after a family member?
Absolutely. You know, it's not about the numbers. It's about what your money can do for you. I sat down with a client a couple of weeks ago, and her primary objective was trying to help out her sister. She wanted to be able to travel back and help her sister do things that she might not be able to do on her own. This was hugely important to her.
So it helps if we can paint you that picture. Okay.
Absolutely.
Well, I can tell that you really care about your clients and their needs, so you must take some great care in selecting which clients you're going to work with. Why is the selection process so important to you, and why should it matter to a prospective client?
It has to be the right fit for both of us. I really want to get to know my clients before I agree to take them on. Asking lots of questions to understand their expectations and whether I can help deliver them. I want to know how they take advice and what investment experiences they bring to the table. There are times when I think investors make investing way too difficult for themselves.
Well, what do you mean by that? And furthermore, what, in your opinion, do you think is causing that?
Well, I think in today's information age, investors are looking for the magic bullet. Some sort of trading algorithm or investing strategy, newsletter or blog, unlimited access to information or other advisor who can read the tea leaves. I'm not the person who can read the tea leaves. I can't foretell the future.
You mean we're all looking for that quick fix, the pill that's going to fix everything?
Yeah.
I can't help but think most investors, like myself, would expect their advisors to be able to tell where the markets are headed. And it's pretty clear to us by now that this isn't always the case. So you mentioned earlier in our conversation, I think in the first section of the show, that the FPSC survey, which is the Financial Planning Standards Council, suggesting that advised clients build more wealth. Do you think many investors feel a sense of urgency to get higher returns?
Now, you might be onto something there. It's not uncommon that I see when people come to me for the first time that they feel uncertain about their situation. The ghosts of 2008 are still with them. Uncertainty over interest rate directions has been playing out now for several years. Whether they say it or not, I think investors are still looking for that magic bullet. And I understand why people do this. They have a lot of unanswered questions about their futures. They don't know how long their investments are going to last, what future health care demands might be placed on them, their situation, their finances, their family. They're looking for security in a sometimes uncertain world.
Is this part of that magic bullet solution that you just mentioned, looking for certainty in an uncertain world?
I believe many people may be hardwired mentally to try and quote unquote connect the dots or create a pattern. With so much information out there, it's possible we might be trying to force a pattern that simply doesn't exist. So we talk about taking all this available information that they believe to be knowledge, and they want to make investment selections based on that.
So I get a sense that this is actually hurting people more than they're even aware.
Yeah, the Dalbar studies really show us this. The Dalbar studies are a cautionary tale and highlight how investors often are their own worst enemies, abandoning sound investment strategies and sound asset allocation strategies when the market winds begin to blow in a different direction.
So it sounds like investors have quite a challenge on their hands. They want safety and growth, but constantly try to beat the market and are too quick to look for answers from their advisors when portfolios underperform.
I think investors are well-intentioned, calling themselves long-term buy and hold investors until volatility spikes and they feel less confident in their strategies, and then they rely heavily on their advisor when they want in or out. Let me talk about 2008 for a moment, particularly for those investors or those listeners investing for income. For those who held good quality dividend paying funds, most of the major players didn't cut their dividend payouts. Yes, the capital experienced some volatility, but once some of the emotion left the markets, many of the quality investors recovered quite substantially by the end of 2009. It's another example how had people stuck to their investment plan in the face of market uncertainty, they might have fared better.
You're listening to Boomer Life on CL 650. In studio today is Jim Doyle, a senior financial consultant with Investors Group. Now, Jim, you've been in practice for over 25 years, so you've probably seen a few market cycles, advising clients in good markets and in bad. And I understand that you have quite a number of written testimonials back from 2008.
You know, during great markets, most advisors look good. It's during the tough ones that advisors really earn their dues. It's not about outguessing markets, because I don't think anyone can do that long term. It's about managing expectations, holding the investor's hand, and helping them keep perspective when others around them may not be so secure. I believe that advisors should clearly explain their role, which isn't to time or beat the market, but rather meet short-term and long-term financial goals. Educating investors on diversification helps create better understandings when it comes to behavioral biases and making choices, and therefore better able to withstand market volatility.
Do you have one of those aha moments that you want to share with us? A simple strategy that most of us tend to overlook?
Most of us have heard about the benefits of portfolio rebalancing, or at least I hope you have. Yet during periods of market volatility, it's one of those things people neglect and wish they had done with 20/20 hindsight. They say that the amygdala in our brain governs the fight or flight response. Now, during periods of volatility, when the protective instinct is on high alert, investors can be forgiven for focusing on short-term actions rather than their long-term planning. In this way, financial advisors can help investors stay invested and focus on the long-term growth, rather than bailing at cycle lows and hurting the chances of achieving long-term portfolio returns.
Well, I understand that yours is one of the very few industries where things go on sale and people say, nope, call me later when prices are higher. Is this one of those instances where investors are making things more difficult than they need to be when it comes to investing?
If I could say it this way, if people could stick to concepts and principles and good asset allocation driven by a long-term financial plan, I think they could be doing much better for themselves. I'd like to help people redefine what financial advice means.
Well, there's never a better time than now to get started. So let's talk briefly about the key steps to building financial security. Let me give you an example. What do you do if you have a couple in their 50s who are seeking your help about how to save for retirement, and you've got to tell them either allocate more savings to stocks than fixed income or risk having to scrimp in old age?
Imagine a couple, age 51 and 53, who have about 80% of their $1 million in retirement savings stashed away in government bonds, yielding 1 to 2%. The rest is in stocks. Their risk tolerance is very low, but they don't change how they're allocating their savings. If they don't do it, they're going to be worrying in their 80s and they're going to possibly start running out of money. We're asking folks in their 50s and 60s to make sure they're not too conservative at a time when interest rates are so low. They need some portion of their savings growing because they don't know if they're going to be running a sprint or a marathon as they age. So we have to have a plan for the marathon.
Well, it definitely sounds like you need great people to help implement your plan and to make sure you stay on track. You're listening to Boomer Life on CL 650. I'm Joanne Sutton, and today we're speaking with Jim Doyle, Senior Financial Consultant with Investors Group. For more information and to get to know Jim better, simply go to JimDoyle.ca or give him a call toll-free at 1-800-665-7178 or locally 604-682-5431. Financial security is a paramount goal for most Canadians. The need for advice has never been greater. Consider working with an advisor to rediscover confidence in your financial future. And there's still a lot more to come with Jim Doyle, including some talk about bonds, ways to enhance your financial literacy, and the ways in which optimism and overconfidence drive some of our biggest financial mistakes. That's next on Boomer Life on CL 650.
Canada's only weekly radio show dedicated to the baby boomer lifestyle. This is Boomer Life on CL 650.